don't expect this to kind of change your life overnight. It's a journey. I think that generally we ascribe to the same principles that you do. The chart is the chart. The art or science, if you will, technical analysis is the same for every asset class.
Hey, good afternoon, everybody. Actually, good morning, everybody. Welcome to another edition of the Trader's MindChat Show, where we talk to professional traders and interesting people in the trading community. And today we are going to have on Pierce Crosby, GM from TradingView. Pierce, can you hear me?
Sorry about that for the delay on my side. Just a matter of, I guess you can join as a guest versus joining as a presenter. So it's a little bit of confusion on my end, but all good, all good.
Yeah, man. Well, where are you at?
Out in California this week. I have kind of a retreat, if you will, that I go on every year. So I make a trip out here in the middle of the summer and the middle of the winter. So you're finding me from, beautiful Northern California. I'm about 150 miles north of the Bay Area. It's great. It's nice to kind of, decompress and reset. So I'm a big fan of it. I miss New York a little bit, but it's good to mix it up occasionally.
Yeah, man, it's good to see you.
Yeah, been a long time. I mean, for those who don't know, I mean, Mike and I go way back to the early days of Twitter and Stocktwits. We, I think probably met in New York in 2015 or so, something like that, maybe 2016, when we were doing some of those initial meetups back in the day. And you were working with IBD, and we were working on building out Stocktwits.
Yeah. Were you there for the when they started doing Stocktoberfest in Coronado?
Yeah, that was my baby. So I built that with Howard for a couple of years. So it was a great show. I remember going out there in 2014, 2013, something like that. I mean, they still do it every year, I think, from what I see. But I think, most recently the pandemic, it's maybe not a big event like we were throwing back in the day. I think at the peak when we did one in New York, we were doing, I don't know, something close to 600 people in that big kind of event space. And but yeah, it's great company and definitely great history lesson, if you will.
Yeah, absolutely. And now you were with my other favorite platform in TradingView. That's pretty cool. I've been using them for years, and it's just so fantastic. What they allow you to do and program and automate it and everything. Can you tell us about how did you make the leap? Well, what are you doing there? Well, what do they got going on now?
Sure. Yeah, I mean, you and I both have known TradingView for a long time, right? I've definitely spent my time kind of watching them grow, and ultimately 5 years at Stocktwits is a good run, and I think that I did my duty there of building out the business side of things, obviously building out the revenue related business segments, and so really I think that TradingView was always kind of globally scaled. So the founders are living in London, and they're very European by nature, but they came to Chicago back in 2012 to do Techstars in Chicago, and so that's where I met them. Was the initial days over in Chicago, and so I knew they were kind of a globally scaled company. I had no idea just kind of the capabilities that they had. But all of a sudden, here I am kind of 2 years in, and it's a very, kind of tech-oriented platform and tech-oriented company. We have about 300 people now. More than 170 of them are engineers, kind of all over the world. And so, I mean, my kind of coming on board was, building TradingView in the U.S. in a much more significant way. So really kind of scaling up operations here and I just hired a new team lead in Chicago, but we have people out in California, people in New York. And so it's, again, just a very similar story to that of Stocktwits. I was the first New York employee for Stocktwits, something like 5 years ago. Well, I mean, now it's almost 8 years ago. Yeah, so more or less the same thesis of building out the U.S. office and the U.S. business. Whereas, in London and in Greater Europe, we have, 200 plus people, and we got a team in Japan, team in Australia. So it really is kind of a globally scaled
Wow.
company.
Yeah, that's incredible. So being on such a global scale, like how is TradingView impacted with pandemic and lockdowns and everything?
Well, I mean, I'll tell you, a lot of businesses are certainly suffering. And I think that, one of our subsidiary businesses that we purchased actually called TradeIt, which is an API technology for brokerages, definitely suffered somewhat during the pandemic. But I mean, broadly speaking, we have a bit of a mismatch. So there's a pandemic, but there's also a huge surge in investor interest in financial markets. And so, during this time when a lot of people have, either shut down their business or been kind of, negatively impacted, we have seen a lot of growth, and we're really kind of thankful for that, for sure, for the people who, want to, take their investing more seriously. And actually, what we do, our main business is, of course, subscriptions. So we offer kind of different tiers of products based on, how many additional features do you really want to kind of upgrade your trading experience in your trading life. So, it's been a good, well, we've just been very lucky, I think. A lot of businesses have, kind of gone sideways or maybe been slightly down. But, when people are interested in markets and, funny enough, there's no sports anymore. There's very little things that people consider, daily entertainment. And they're stuck in their apartments and, for 20 hours a day. So you just naturally end up on TradingView.
Yeah.
It's just like an externality of the whole industry. Yeah.
Yeah. Well, what can we bet on now, right? What can we bet on? Well, we can bet on the market.
Yeah, that's really all that's left, right? I mean, I think that I'm actually a bit worried about that kind of parallel, which is, people aren't taking investing nearly as seriously as maybe previous generations have. And this is, it's a double-edged sword, right? I believe that, I mean, obviously, commission free is a good thing, and I do think that it's a natural positive for the industry. But what it does is it obviously makes trading much more I guess frictionless, and thus people want to trade more. And I think from what we've seen historically, across the board, very, very active trading is not actually, kind of correlated with performance, right? So I think, people actually slowing down and being more methodical in their investing process is really what we need for all these new investors, rather than, you've seen like the Davey day trader of the world, kind of folks who obviously aren't taking this, as long-term investing. They're just looking for those quick wins. But yeah, I mean, broadly speaking, I do love that everybody has, gathered some interest in investing, because, I mean, for your financial wellness in the future, I think it's, extremely important. But yeah, short term, there's a lot of kind of that sports betting parallel where, people are betting a couple $100 here or there, kind of betting it all, if you will. So there's really no kind of, like 2% return per week. It's more like, how do I make 300% in a month or something like that? So
yeah, oh my
totally
God,
different. Totally different.
The number of times that I've heard something like that, like either on Instagram, Stocktwits, Twitter, well, whatever, like somebody like asking me that kind of a question.
Yeah.
How do from your perspective, how do we change that narrative, or like get people thinking in in a way that they could win? right? Like out of the gambler mentality.
Yeah, yeah. I think what I often tell people, and we've been working on. So we actually hired a senior CMO in London, whose main role is to make what we do more tangible for the average investor. What we've built at TradingView, and really what the founders have built, and I've just come on to kind of help broadcast to the larger world is an insanely complex, sophisticated investing product. But we can't expect that, new and beginning investors are going to actually know what to do with that or how to use it. And so really some of the senior hires that we're making over in London are purely focused on kind of that educational segment to make people more intelligible to the markets. Basically, what is the core features that move markets. What are the kind of core risk principles and money principles, so that you don't end up blowing your account up in a matter of weeks or something like that. So we're definitely taking strides for it. I think broadly speaking, the industry really needs to see you take this more seriously. And there's a lot of people that have been doing this for decades that I always look to as kind of people that we really identify as key winners of the industry. And it's funny, I think a lot of people have said things like, "Oh, Warren Buffett's washed up" or something like that. But the dude his return profile over the last 50 years is absolutely astronomical versus a lot of these day trader type folks. And it's kind of like you got to be thinking long term. And so to change the narrative, I do really think companies need to start stepping forward and saying, unfortunately, it's not in somebody, like, say if I'm a startup broker, it's not really in my interest to having people slow down and actually do research. It's in my interest to make you trade more. And so really a lot of these startup brokers have built this narrative, which is trade more, make yourself rich and then retire. The reality is their direct interest is in making you trade more, because that's how they actually make money. Our business is really do research and become successful. And so I think that a lot of companies like ours, as well as yours, I mean, Mar Wealth is a perfect example as well, need to focus more on basically financial wellness and making people, more sustainable in terms of their investing philosophy. I think, when I was in college, I remember having a desktop TradeStation software, and they gave me $500 for free in trading fees and stuff like that. And so, I thought, oh, sky's the limit. Like, I should just go be the next Gordon Gekko and, trade all these companies and make a ton of money. And ultimately, I think I blew up my first account within 8 months, I think, something like 8 or 9 months. And so, if that's any, rules to people, it's, don't expect this to kind of change your life overnight. It's a journey. It's not like it's not just a giant kind of meal ticket, like you're gonna make a couple million and then retire. It's really not how it works.
Yeah, I was just thinking too, and well, when I again scrolling through the social feeds, like you see people like driving like a Lamborghini, whatever, and like look at my trading account, blah blah blah. Like, do you know anybody, like anybody that's approached this and like within like a couple of months, like they're making like 300% returns? Like,
um,
I've yet to find anybody that's
yeah,
done anything like that. Like,
yeah, yeah. I mean, I'd say most recently we've seen a huge uptick in interest in the options markets, and of course, as you know as well as I do, a ton of leverage that's available to people via options. But ultimately, what you're talking about is sustainability. So even if somebody is massively successful in the short term, say they join, they sign up for Robinhood, they put $1,000 on, Cloudflare options, they go up 300%, and all of a sudden you have, something like 80K. It happens for sure. And we see it every day. But in terms of the key issue, it's your next investment. You're just going to be, if you think that is winning, you're in for a reckoning, if you will, because the reality is sustainability around investing is much harder than, making a one-time home run. And, the best batting averages in the industry are people that, win 51% of the time. So it's really, the people that are barely squeaking by that actually really make a killing long term versus, people making a single bet and, really hoping that that's going to be sustainable in the future.
Yeah, it's kind of like that goes back to that coin flip example. Like you get paid $2 for every time it lands on heads, you lose $1 every time it lands on tails. That's a great trading system. I'll play that all day.
All day. Yeah. 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 I mean, 51% of the time is still a brilliant feat for a lot of people. I think that, I mean, the biggest moneymakers in the world, whether it's the Jim Simonses or the Buffetts, I mean, they take huge losses as well. So they really just, eke out a very small margin, and that's you keep doing that year over year, and that's how you that's what return on investment actually looks like.
I had a question come in from one of our attendees asking about TradingView's view on Bitcoin and the crypto space. Yeah.
Well, crypto is a huge component of what we do at TradingView, and funny enough, the founders actually pulled their initial crypto feed. So I don't know if you ever used the Wayback Machine. It's basically
machine.
Yeah.
It goes way back for me. I don't know.
So it's like
sorry, I couldn't resist.
Yeah, it's too easy. So Wayback Machine basically indexes the internet over all time, right? So you could see in 1992, what did Apple's website look like, or something like this.
Oh wow!
So if you use the Wayback Machine to look at TradingView in 2012. 2012 was the first year that they actually pulled a crypto data feed from Mt. Gox, which at the time was the largest crypto exchange in the world. Obviously, they went sideways and blew up because they had really bad problems with money laundering and all this stuff. But we pulled probably the first data feed that was available into TradingView so that people could start charting it. So these guys have been, I guess, ahead of the curve, if you will, in the crypto space, kind of since the beginning. Fast forward to today, I mean, we pull in data feeds from probably about 20 different crypto exchanges, and really, we're pulling in new data all the time. So a lot of different metrics, a lot of different spot markets, futures markets, derivative markets in the crypto sphere have kind of come to the foreground, and we pull in all that data for investors. So from what I understand, and really, kind of watching the network grow over time, TradingView is kind of the default place for crypto. Because that really in-depth technical analysis is what people want, for their different crypto assets. For Bitcoin specifically, irrespective of TradingView's role, I personally am a big fan, and broadly speaking, I remember actually at Stocktoberfest in 2017, we brought Fred Wilson from Union Square Ventures to speak, and he and Howard Linson, the founder of Stocktwits, had a fireside chat and talked about crypto. And Fred said something that really stuck with me at the time, which is, I don't really know where all this is going, but I know that I have to be an investor. And so, it's funny enough, about 6 months beforehand, he invested in Coinbase, which is now one of the largest crypto exchanges in the world, well, crypto brokers in the world. but he said, basically what I've done is put 5% of my portfolio in crypto. And, at the time, I don't think there were that many assets in crypto. So really what that meant was invest in Bitcoin. And so, 5% of your portfolio was kind of allocated to Bitcoin as just a, risk balancing kind of, starting point. From there you can go into all these other things like altcoins and DeFi and all this other stuff. But really at the time, he was just a big fan of putting some of your wealth in Bitcoin just for, for the sake of watching it grow. And I think I do still ascribe to those principles. I had the pleasure of meeting the executive team at Gemini recently as well. And they've basically had the same kind of philosophy in mind, which is, if you're really not sure, the best way to learn is to watch and to be actively involved in the process. And I think, in the investing world in general, if you have skin in the game, it's really how you actually learn, because, it makes a difference to you. And so whether it's, equity investing or crypto investing, having a small stake is often a great way to kind of, just have a big interest in the future of it. So, I love crypto. I know TradingView loves crypto. And broadly speaking, we track like kind of global traffic and all this stuff. Crypto accounts for about 30% of our traffic footprint for TradingView, wow. Right? Because we have something close to 15 million users using the product, and so every month that's 5 million people that are coming to us specifically for crypto. Our data, all of our analysis, and all this. Yeah.
Is it evenly split then between crypto, forex, and I guess stocks, or is it like?
Yeah, you're right. I mean, so forex actually we also include futures in there. So really, crypto and stocks are about 30% each. Stocks is actually a little bit bigger. So it's about 40% stocks, 30% crypto, about 20% FX. And then, the remainder is futures. It's, a small margin, maybe a couple percent, if not more. Futures traders are obviously some of the most sophisticated traders that we have, but it's a small world, right? Because you have to be moving very large sums of money. So not nearly as accessible as, equities trading or crypto trading for that matter. Yeah.
Is there anything that's inherently different in the data or the charts for each of the different asset classes? When I'm looking at them, if you just hid the symbol, to me a chart is a chart. But is there anything that you see there that's very
significantly different per asset class? That's a great question. We have had a ton of people want to build asset specific technical factors or indicators or oscillators or what have you. But I think that generally we ascribe to the same principles that you do, which is a chart is a chart. And at the end of the day, most successful kind of indicators, et cetera, apply off the same principles. So the art or science, if you will, of technical analysis is the same for every asset class. It really does not matter. I do know that in the FX world, there is a much higher emphasis on volume and volume studies than say crypto. I do know that there is a ton of interest around 52 week highs as well as Fibonacci's. So generally speaking, those are kind of spaces that I'd know a little more about. But for the equities world, pretty much all of our tools are really built first for the equities world. And so everything we do, it really relies on the equities world as a core business. But yeah, no, I think that, the same principles apply throughout. I haven't really seen a ton of, crypto specific type of oscillators or something like that. But again, we have a ton of, really unique data for the crypto world. So I guess you could say that, overlaying those types of data sets could make you a little more competitive versus, the equities world. You have your standard I don't know if you saw, but we just rolled out, global fundamentals data. So we have fundamentals data on equities for over 10,000 companies. So if you want, free cash flow for Apple, or debt ratios for Oracle, we have all that now. So we just rolled that out recently, actually.
Oh, interesting. Yeah, no, I haven't gone into that. The way that I've been using TradingView, it has been really like having my own Pine script codes that if I needed to go and track this somewhere else, like I would be doing it manually by hand on a piece of paper.
Yeah,
And
yeah.
um, yeah, and like really the annotation features, it's really second to none. Like it flows so well. Yeah, I think I'd like to dig into some of those newer features. See what else I could do. Oh, he's still there? Did we lose the feed for a
Yep,
sec?
still here. Yep.
Awesome.
I think that there was a little bit of chop, but still here, yeah.
Question came in. Are there any industries that we should keep an eye out for trading in 2021?
Well, I mean, I think that you got to look at the outliers for sure. I personally have no interest in energy, but we do see a ton of interest on TradingView around energy. And this is purely because, they've been beaten down so badly, a lot of the majors. But, I mean, you also got to think about what is new energy versus historical energy. So energy is not just one category, but it's going to come renewables, alternatives, is definitely a very, very hot cooking, and it's been a conversation for a long time. I mean, I don't know if you know the previous generation, but First Solar, China Solar, all these companies that made the actual push something like 15, 20 years ago. Today, there's a more robust set of names that people can actually get behind. So I'm a big fan of that thesis, and I do think that you're actually really starting to see the fundamentals catch up, if you will. Like I think maybe 10 or so years ago, a lot of people thought, oh, renewables is the future, but the fundamentals didn't really hold up. It was kind of more of a story than it was like a reality. What we see on the fundamental side of things is that renewables is actually very much a real business, and you can look at the price ratios and the actual sales they're doing to understand that. Broadly speaking, I'd say in terms of another sector, again, this doesn't really fit specifically into the classic sectors, if you will. If I think of like GICS, which is a global data set that basically has all these specific allocation of sectors and subsectors. I'd love to build a stay-at-home sector, because really, from what we see in terms of interest, I mean, that's what people really want long term, from an investment perspective, because businesses that previously seemed somewhat small, in a new environment where obviously the multiples are going to be pushed much higher. It reflects basically the overall kind of evolution of this sector, if you will. So, funny enough, today actually I looked just out of curiosity. Citigroup is now worth less than Zoom Communications, and if that doesn't say anything about the space, I don't know what does. I mean, the whole sector is super interesting. So I do love the idea of really, tech oriented names, but also you got to think of big delivery services, packaging services, basically a lot of types of companies that capitalize on the fact that people might be restricted from the mobility perspective for the near term. And when I say near term, I mean, I think probably over the next 1 to 2 years, we really see outsized performance this is just, I guess, what we see from the data on TradingView. Really, the people that are interested in these sectors haven't slowed down. They've really. So I think that we've seen, the real estate is interesting to me because broadly speaking, in March, we had a huge sell-off, of course, as we have with many assets, um, but they've all sold off kind of apples to apples. But when you really drill into a lot of these real estate plays and REITs, there's a huge, I guess, separation between what is, say, commercial real estate versus residential versus warehousing and all this stuff. And so warehousing is the server and basically commercial goods storage. We do see a ton of interest around that because you're not betting on the WeWorks of the world or the Brookfield asset managements, which are heavily focused on commercial real estate. You're focused much more on the I guess the warehouses and kind of the large industrial spaces, which are not slowing down at all. I mean, they're only accelerating. So there's a bunch of companies that are now buying up big chunks of warehouse space in New Jersey, as well as California, some in New York as well. And they're basically REITs that focus on storage of commercial goods, as well as basically smart storage for things like servers and things like basically different types of commercial goods.
Interesting. Interesting, like how those two, the remote work and the industrial warehouse, like to me, like I see that as like kind of going hand in hand. Like people are ordering more stuff online, like Amazon, like from wherever. Like you could even say that the renewable energy like has a hand somewhat in that as well. I feel anyway. Just from powering different things. It like it it really is the theme of 2020 and beyond.
No, I agree. I mean, ultimately, a lot of these trades have already been made. So the Zooms of the world now, like people are questioning, is this high? Is this too beyond the realm of actual quality? And I think you got to look more broadly. A good example is a company called Atlassian, which is company ticker Team. They produce kind of workplace software that I don't think people really understand is nearly as impactful as it is. And funny enough, people always talk about how Microsoft is old school and not nearly as compelling. But they now have some of the most high performance kind of chat communication software inside of companies with their launch of Teams, actually. I think that you got to think a little more deeply in terms of what a more sedimentary, or I guess a more home-based lifestyle is going to actually do for different brands. And if this is a longer-term trend as well, you got to think of the parallels. I think a lot of people are trying to bet on airlines right now because they think, oh, airlines are super oversold. Going back for the last 20 years of watching financial markets, airlines always underperform. So I don't understand why people are taking this like an opportunity to buy the dip or something like that. It doesn't really play out for me. And to be honest, you got to think about opportunity costs, right? Like, what's your expected return from something like a Boeing or a Delta versus something like a Zoom or a Cloudflare or something like this. There's exponential opportunity in tech because the software as a service is basically unlimited upside, whereas Delta might have a 5% growth or a 10% growth in the market, but but you're not going to get those same kind of exponential curves in a lot of these businesses. So naturally, it just changes the whole lens about how you think about addressable market for these companies.
Yeah, I think it kind of goes back to one of the points that you made earlier about how people are approaching the market, that they want to make this like incredible return, and they're just focused on the money, and they don't learn anything about trading or investing or research or any of that. And they see that, oh, Boeing is down a lot. Let me buy that dip, yo.
Yeah. Yeah. I mean, a lot of those trades, I think, it's funny because back in the day, Stocktwits was one of the kind of the founders of the thesis of buy the dip, and we were basically the ones, saying that this is a huge opportunity and all this stuff. And yeah, there are limitations. I do think that not every company is going to bounce back, so you really got to think of what is that potential upside before looking at the, oh well, it's fallen 30%, so it must be a buy. That's not the logic that you should be following when you're investing. Yeah.
Yeah, there's a difference between like buying the dip as like you're in an uptrend and it's coming back down to say like a 10-week moving average or something, and buy that dip, versus like something that's been falling like off of a cliff, and it's just like, oh look, it bounced off a rock on the way down to the to the
Yeah.
bottom. Like let me
Yeah.
pick that up.
Yeah, the Kodaks and stuff. It's yeah, again, the opportunities may be short-lived, but yeah, there's better markets to be playing in my opinion. So who knows? I mean, it works for some people, but not really, not something that I think of as repeatable ultimately. Yeah.
Yeah, man. So let's see. Well, are there any other questions from the audience? I see like you spoke about, are there any international markets U.S. traders should keep an eye on?
Great question for sure. In terms of, this is actually where we do have a little bit of a competitive advantage at TradingView, because we obviously have a global footprint, right? So we see the interest level over time for different markets based on their traffic, based on their average engagement per user, all these kind of metrics that we track as a business to understand what really is working. One thing that I have seen over the past 6 months, actually even before coronavirus happened, which is obviously you got to take everything into account as it relates to the whole pandemic, et cetera. So you got to kind of sift through that data to really figure out what's actually performing, outside of this whole pandemic related era. Brazil to me is really interesting based on what's seen from the data, and I'll explain a little bit as to why.
Well, what was that last one? You cut out a little bit.
Oh, sorry. So Brazil.
Brazil.
The story of Brazil is quite interesting. Obviously, they have a bit complicated political sphere, but really what I think drives my interest personally is the what we see from a traffic perspective, from kind of a overall interest level perspective, is a massive growth in investor interest. And what that really says to me is that investors have taken the market more seriously, and they're not investors that are thinking about investing in public equities. They're investors that are thinking about their own domestic market. So it's a very different business than a lot of regions kind of think about how they can invest. So a good example is India. India is very interested in the U.S. market, but Brazil is very interested in Brazil, which I think is really kind of telltale as to the kind of growth of that market over time. And as a result, it's definitely something that we think of as something that has received a ton of outsized interest from investors based on the growth that we've seen. In addition, I'd say, Hong Kong has always been a very popular market. But as you're well aware, I'm sure, obviously they've gone through a serious kind of rift with the mainland government in China. And so there was a bit of a decline in interest over the past couple of years because of, people basically being very concerned with how that's going to end up. As things have kind of shook out, it doesn't seem apparent that that corporates are fleeing Hong Kong, which was something that was kind of initially thought of. And as a result, the market was taking a pretty significant hit. So Hong Kong still remains kind of one of the capital cities for finance, and if they're not going to have this kind of mass evacuation, the Hong Kong market is still a very large one. I do know that a lot of Hong Kong corporates also, list in the U.S., and so there is a natural kind of overlap with our kind of trading market and all these different ADRs that are listed in the U.S. now. So a lot of them have been beaten up pretty bad. But ultimately, I think reality is slowly crystallizing as to the state of, the political sphere in Hong Kong, and if we don't see this kind of mass evacuation that was initially kind of a thesis that people had, I do think that that's an undervalued market in terms of the quality of companies that are there. I mean, we're talking very large multi-billion-dollar companies that have fallen 40 to 50% over the last 6 months even.
All right, to bring things back around full circle while we wrap
Sure.
things up, if there was some books that you would or that let me phrase it this way. Well, what
Sure.
trading book have you gifted the most?
That's a great question. It's I actually, so I'm a big reader. I actually haven't read a ton of investing books recently. I think that, for the most part, I just follow kind of ongoing news, etc. Because I do feel kind of most of the classics, if you will, have really kind of come out. And obviously, I've followed some of the more recent books. The Michael Lewis book, Flash Boys, is really interesting, as well as Patterson's Dark Pools. Scott Patterson, he's a reporter for the Wall Street Journal. Dark Pools is a great book. But for people who really want that kind of introspective look into how investors think and how markets work, it's actually a very underrated book. I think it's called More Money Than God, and it basically goes through the lifestyles and daily process of some of the most successful investors in the world. There's small vignettes, right? So they go into, I think in total they do profiles of 8 of the most interesting investors of these, and really kind of their history, their trajectory arc, and I really do like those stories because it gives you a sense of what their daily life is like. Some of them are actually quite boring, but extremely successful investors, and so it's a great read. It's a little dense, I mean, obviously a lot of investing books are, but Jack Schwager's book on market wizards is obviously great as well. I do think that More Money Than God is very similar, but maybe a little more splashy, right? Because some of these hedge fund managers are obviously living kind of bizarre, lavish lifestyles, and they're just really quirky, weird people. I think that some of the best investors are a bit kind of out there because they have to be, right? That's the nature of the business, is kind of having some insane level of conviction, if you will. And so I do recommend that book a lot. And new employees that we hire at TradingView, I often have them read that book just so they understand kind of the business and how things work. Yeah.
Oh, that's interesting. I actually haven't read that one yet. I'll pick it up too.
Yep. Yeah, a little late summer reading. Why not?
Yeah, absolutely. All right, Pierce. Want to say thanks a lot for coming on the show. Really appreciate it. Great talking to you. Great seeing you.
Yeah. No, it's been a long time. I mean, thanks for the invite. It's always good to reconnect. And yeah, no, I hope to see everybody, kind of either on Twitter or TradingView. Just hit me up anytime. But yeah, I
Yes.
mean,
Well,
go
where
ahead.
can they hit you up? Give us the Twitter handle.
Yeah, sure. I mean, high level Twitter handle is Crosby Ventures. Funny story, I actually built that handle when I was a little kid, not even knowing what a venture capital firm was. So I just have it, and so I've kept it. I haven't thrown it away and gone for a more traditional route. So hit me up on Twitter, Crosby Ventures, one word, or TradingView, same thing. You can find my handle, and basically Google me. You'll figure out where I am.
Awesome, man.
Yeah.
All right.
Good stuff. Thanks,
Yeah.
Mike.
Thank you. Have a great day. Thanks,
Okay.
everybody. Take
Talk to
care.
you soon.